All right, so we're going to get started here in just a moment, but I do want to make sure that the microphone is okay. So go ahead and let me know in the various chats if you can hear me okay. That would be, excuse me, my voice is not holding up lately. I apologize. That would be on X, YouTube, and Twitch. I will advise you if you are on X, the stream is pretty crunchy over there, and there's nothing I can do about it. I'm pushing a pretty high bit rate, but unfortunately, X compresses the hell out of most streams, and I am streaming to multiple platforms. So if you do want a much cleaner stream, I do suggest that you head on over to the YouTube stream. That is linked in my X profile. It's also posted there as well. It's one of the more recent posts. So if you can just let me know if you can hear me okay, and then we're going to get started momentarily here. Yes, yes, Cheryl. Crunchy. That's how I would describe it. It looks pretty bad on the X stream. I'm pushing a high bit rate out, so bit rate from me is not the problem there. I've noticed this with other X streams as well. So if you do want a much better experience, I do suggest that you head on over to the YouTube stream. It's just a lot better in terms of its video quality. Although the bulk of my audience is on X these days, I do want to welcome quite a few new people to my streams here. We've got a lot of communities that I'm a part of that are hanging out now. So I do want to give them a little bit of a shout out. We've got, of course, MBO. That's the new Bitcoin order. Thank you guys for showing up as always. And we've got Pepe Ordinal's Maxis have been showing up now too. And that's really awesome. We got some cool stuff planned over there, I believe. We've got Sigmas. You guys are coming in hard all the time. I do appreciate you coming through. Of course, we've got our Nat Monkey crew as always. So, we've got a lot of new people that are starting to come and hang out in the streams, and there's probably going to be a lot more. Uh, I've got a few things planned across different communities, and we're going to see if we can set some cool stuff up. There's a lot of awesome ideas coming out of those communities of how we could help each other. Of course, as you all know, everything that I do is free, and it's going to remain that way. This is to help inform those of you who want to learn how to trade or just get a gauge for where price is going. And we're gonna, hang out and have fun. That's like the main thing here is to learn, have some fun, see where price is going. Um, and then, of course, if you are interested in learning how to trade these markets, I'm gonna do my best to try and help you get started. Now, it does take a lot of work on your own, but at least get a gauge for where things are going so that you can set up trades accordingly, or find confluences with your analysis and my own. And yes, we won't always agree on where things are going, but that's okay. That's good. We should have different points of view of where things may head. Of course, most of those different points of view come from my own TA channel, and that's a great thing. I do enjoy that actually, as contentious as that can get sometimes. All right, let's go ahead and get over to the live screen here, and let's see if I can actually hit the right buttons, and then we're gonna get rolling. Also going to be doing some more spaces, events, and stuff like that. I'll have some info once we nail some things down. Some more events in Discord so that we can all jump in and live chat. Some community stuff will be coming up between different communities. And just got to, bear with me while I get things set up. and we're gonna have some fun. And I think it's gonna tie in more than just TA, of course, as many of you are here from the ordinals community. Some of you actually are very, very adept at TA as well. So, there's a good opportunity for us to all share our different perspectives on what's going on in the markets, and well, have fun and help each other. All right, so let's take a look at Bitcoin on the daily to start. Now, if you watched yesterday's recorded video, I did not actually stream it. I've got a few things going on here at home that are, well, they're solvable, but concerning nonetheless. Had a water heater go out on me overnight, so I've got a technician coming to fix that. That is one of the reasons why this stream is a little bit earlier than usual today, although the streaming schedule will be changing. So as I get more information from everyone in the different communities and kind of, which time zones people are in, we're going to start refining some more expedient times for myself and everyone else. So, and that should allow for more people to start hanging out and be able to ask questions, stuff like that. So, one of the things that I did mention is, and it's in the title of yesterday's recorded video, is that Bitcoin, it's the bulls had their chance. They had their chance, and that was in yesterday's candle where they did set a swing low, but not a closing low. Now you may have different opinions on how to read swings and closes, and one of the things that I did mention here is, although Bitcoin did throw a drive of bullish divergence here, for me, this was not a closing low. This was purely a swing low. All right. So what does that mean? In this case, we had a 3 candle structure come in on the close yesterday into the open today. And we did not get a close above this 63, 161.35. That is where I would need to see a 3 candle low on a close be set. That, of course, means that if we don't see price get above there and set that low on a close, then we're more than likely going to hang out sideways or fail. And in this case, this is actually a pretty ugly daily candle, and I'm going to explain why here. We have the potential for a bearish engulfing candle. It's already engulfing in today's price action. We see that we swung the high a little bit higher than yesterday's high. And of course, we are trading in the wick of yesterday's candle, but we've also swung the low. This would qualify as a bearish engulfing and be particularly bearish coming into the open of the Saturday candle if we see any closes below 60,600. Now, I did mention in yesterday's video as well that, as long as Bitcoin is holding on a closing basis above 60,600, I'm actually okay with this swinging down here. Now, I'm going to look at some lower term time frames, and the picture is not so rosy. So, more than likely, if Bitcoin closes anywhere below 61,350 in the daily candle, in lower term time frames, we're going to get into the weeds, but anywhere below this October of 2021 monthly and that lower first standard deviation of the Bollinger Bands on the daily here, which is coming in at 60,900. It's kind of oscillating between 60,910 and 60,900, depending on where price is. Now, price is right on top of it at the moment. So anywhere below here, not only do I think today's current low is going to get ran, including yesterday's, which is, of course, higher than today's current low. We have a low coming in at 60,200. I do believe that the lower second standard deviation is a prime candidate to get tagged. Whether or not it happens over the weekend doesn't really matter, as long as Bitcoin is below this monthly, and especially the daily lower first, on any kind of a closing time frame below the daily, even like a 4-hour, if that's below the lower first on the daily, then the volatility target to the downside overall for that daily set of candles is going to be the lower second standard deviation, which is coming in line with the monthly and quarterly from March of 2021, and that is at 58.8. Anywhere below there, Bitcoin's going to come back and run this low. Now, there's a few different ways to interpret this. I had mentioned, I believe on Monday or Tuesday, that Bitcoin's only real opportunities to get bullish divergence, and the preferable bullish divergence that you want to see is going to come in range. And we did see most indicators pop off with that regular bullish divergence from this low over here as it relates to the swing low, not a closing low, even though your indicators are going to tell you that's a closing low. If it was a real closing low, we would have seen price push up a little bit more. But in this case, we did get one drive of bullish divergence, and that did come from within range, but it wasn't enough to pop price up. Outside of the pop that we already had seen, that move is now over. And the only other way that we're going to see additional bullish divergence populate from this low over here is as long as Bitcoin is hanging out above the, let's see, that would be a 39 read. So it does have some room to even move down locally within range. So let's go ahead and project this out a little bit. This is a fancy indicator. This is not a free one, unfortunately, but there are plenty of free RSI indicators with info boxes. In this case, we can set the bearish control zone to 39 just to see what price would be if Bitcoin were to head down here. So you can see that that's the 30. Let's go ahead and just double check, make sure. What is this? This number here. This is going to be a 38.7. So a 39 is where you would need to see Bitcoin bottom out in terms of RSI. Now, what would the price be? Price would actually be 58,697. So that does mean that Bitcoin can safely come down and tag the lower second standard deviation on the daily. And if it puts in a low around there on a close, specifically, this is on a close. You got to remember, RSI is not measuring the wick, it's measuring the close. So in this case, if Bitcoin closes anywhere in this zone by the quarterly, it can come down and tag as long as it's closing above the lower second standard deviation and this March of 21 monthly and quarterly at 58.8. It will have an opportunity to potentially throw another drive of bullish divergence. If it closes anywhere above there, but below this candle set coming in from the 17th into the 18th that set that low, it will also throw a drive of bullish divergence. So there is the opportunity for Bitcoin to throw a second drive of regular bullish divergence from within the range. Now, the other opportunity that Bitcoin has is that if it does lose this range, that bullish divergence is now out of contention, right? So if it starts to lose the lower second standard deviation and this March of 2021 monthly quarterly at 58.8, then we're looking for it to potentially run this low. And the only way that you're going to see bullish divergence populate from there would be if Bitcoin makes a closing lower low. That does mean that it can remain in between the wick and the close here. So the wick is coming in at 56,500. The close open is coming in at 58,265. So Bitcoin can potentially run this area if it closes below this 58,265. One, it's still bearish, but if it remains above that 56,500 and sets a closing low, then guess what? It will throw regular bullish divergence off of this particular low structure. And just to show you what that would, it can throw, how far down it can actually throw bullish divergence. This is going to be where we're going to start talking about some lower targets. So anywhere in that wick low to close open, 56,500 to 58,235 or whatever that was. Well, we will see bullish divergence populate from this lower low structure. Now, of course, if Bitcoin makes any lower low than the wick low at 56,500, we're looking at some of those further downside targets, but we can get a read for where price would need to be in order to throw bullish divergence. So in this case, this is a 33.41, so we'll call it a 34. So let's go ahead and throw 34 on here. and we can get a gauge for where price would be in that to throw bullish divergence there. It just so happens to be 55,500. I'm going to show you why that number is pretty relevant as well. So this is it's kind of do or die right now for Bitcoin in this particular range. Otherwise, it's going to go down to retest the low. Now, that being said, if it loses the low on a close and does not set a daily low, which would be a lower low on divergence at that point, so this is hypothetical as it stands right now, then I do have to open up the targets down here to this $53,000 at this September of 2021 weekly swing high to those $50,000 weeklies here. That's 51.8 at the August of 2021 weekly down to December of 2021 that was coming in at 50,800. I could even entertain a little bit lower there, about $50,000. Now, if that area did not hold up, which, by the way, this was historical resistance, right? Because these were highs put in 2021 between 53 and about $50,000. We saw this area as resistance and then again as support here back in February of this year. So it is a relevant area to be looking at if Bitcoin does break down from this big monthly area and, of course, that quarterly there from March of 2021. If this area did not hold up, I do have to talk about the next big step down, and that would be the monthlies there from August of 2022. You can see that Bitcoin on the daily here did find this area as resistance between August of 2022 and March of 2022, and this was 47,000 to 45.5. That would be the next really big area. Honestly, that's a freaking gift for bulls if price got there. Hell, $53,000 to $50,000 is a gift at these weeklies just above it. I'm not entertaining the upper $40,000 from here, but I did want to make you aware of them as relevant areas because I've got some stuff going on at the house right now. I may not be able to be around to actually evaluate price if it starts to expand down towards some of these areas. So I wanted to get that out of the way. Now, this has been a downtrend. And what does Bitcoin need to do to break the downtrend and start looking for further upside? Well, it needs to set a higher low on a close. And in this case, we need to see that higher low at this particular moment come in above that 63, 161.35. So on any daily closes above there from here, we would see a higher low if it does not pass this lower low down here between that 58,267 and 56,500. Now, if it sets any kind of a higher low, what does it need to do? It needs to take out this spike high right into this April of 2021 monthly swing high at $65,000 rather. That swing high there and is coming in at just above there at 65.5. So that would break the downtrend. I would then be looking to the next big area for Bitcoin to beat out, and that would be the 67,200 to 300 area. So above there, you can also see that these levels pretty much line up with our Bollinger Band volatility levels. The upper first is sitting right around $65,000. The upper second is at that next lower high at around that 67,200 to 300. Above there, I would mark price up for an area of interest to around $69,000 to $70,000. Of course, that's the prior cycle all-time high. And then above there, I'd be looking right back to the high, somewhere 70 to 72, and then of course 73 to 73,835 by the all-time high up here. If that area was taken out to the upside, we've got further upside targets around 75 to 78, 78 to 80, and then mid to low 80s to kind of start looking for those areas of interest to the upside. Not really relevant right now. Bitcoin's desiring some further downside as it pushes into the low 60s right now. And when looking at something like a 12-hour, we can see this is another lower high, potential to paint another lower low here. And, you know, we did get a higher high on a close in relation to this little spike high. We even got a higher high on a wick here, but this isn't really a closing structure in my opinion. This was a continuation of downtrend. I'm seeing a lot of people talk about this 12-hour here as like, oh, Bitcoin broke it. It is a structural break, but it's not. The real 12-hour high to break was up here at around that 67, 200 to 300. This was more of an intermediate rejection area that needs to be recovered. We saw it rejected again, of course, on Sunday coming into Monday. So, this is 12-hour continuation. I did want to point out that the 12-hour is set up in kind of a big range. So the upper first standard deviation held down the 12-hour on a closing basis, closed right on it a few times here, closed open at least once rather. And that is coming in at around $64,000. Of course, had that wick up into the overhead resistance at 65 to 65.5 at the wick high there. Now the basis did get ran down into from that area down into this October of 21 monthly support area at around that 61,350. We saw a low set. Of course, this did come on divergence, but now, of course, we have a lower high, all but confirmed at this particular moment. So anywhere below the basis, we're playing in the weak half of the bands. And we can see the lower first standard deviation is coming in at around 59,700 to 800, depending on your exchange. Below there, of course, I would be looking to that monthly quarterly from March at 58.8. And that, of course, is March of 2021. And then below there, we're looking to run the closing 12-hour lows, which is also the daily closing lows down here. And that is coming in at around 58,000. You can call it 58,000, but here on the 12-hour, it is 57,500 or so, 500 to 600. Below there, of course, we're looking at the lows and lower down to that 55.5 by the lower third standard deviation. So you can see how some of these things are interacting with each other in this case. So this is bearish still, but it is a range as it stands right now in terms of the Bollinger Bands. If we did see things pop back up, of course, Bitcoin above $64,000, you do want to see a 12-hour close at this point because that area has been rejected since coming up and spiking the upper second in this downtrend. The area that it needed to beat when it spiked that area here was beat, but it consolidated and then broke down from the low there, and this is the low that we've been seeing that bullish divergence populate off of. So you really do want to see Bitcoin remain in this range between that 58.8 and 61,350 and possibly consolidate. As it stands right now, looks pretty bearish, but it's a long day to go still, and then it's a weekend, so anything can really happen over the weekend. If by chance Bitcoin did pop back up above $64,000 on a close, of course, 65 to 65.5 is the next area to look. And then just above there, we have the upper second standard deviation at $66,000. You start seeing closes above there. It would be slight expansion to the upside, but it would be right into this resistance at this 67,200 to 300. So I want you to understand how those things kind of interplay with each other. This is a consolidation. We did have a trend break. We had then a lower low. We had a little bit of a trend break or attempt at trend break, at least on a swing basis. We had a higher low set. Now we've got a lower high. This is all choppy consolidation, sideways consolidation around the lows. And if it resolves to the downside in terms of expansion on the 12-hour, below this low, and then subsequently loses 56,500, we're looking at a more aggressive 12-hour expansion at that point, and that likely leads to daily, 2-day, 3-day, 4-day, 5-day expansion, and that's where we would start to look at this $53,000 to $50,000 area. And quite honestly, it's quite low in comparison to the production cost. And I know this from mining myself. So I do look at all of this as opportunity, even if it were to dive much lower. Although some of the things that we've talked about in the past could come to fruition. There's a few things that we've talked about in the past regarding miners that, you never know, might come into play. Now, I did want to note that Uh, Although you're going to see specific indicators call production cost around $60,000, although Caprioli or Charles Edwards has updated his model for production costs for Bitcoin to be around 77. I believe it's come down to like 72. But I'm showing you mempool here because what we're getting is a difficulty adjustment. We just experienced a 5.62 difficulty adjustment to the downside. So that does lower the production cost. And then we're looking at a potential difficulty adjustment down of another 2.54% as it stands right now. Of course, this isn't going to come in until the end of May, but it is something to be aware of because when you get difficulty adjustments down, that does lower the floor. I would estimate, based on what I'm already seeing from the mining side of things, that production cost is right around where Bitcoin is trading right now, around the $60,000 level. At least that's what we're calculating, at least in my pools. So, anything below $60,000, in my opinion, if you can get in buying below the cost to produce Bitcoin, it's, well, in general, a good deal, unless you do believe that Bitcoin is going to go to zero, like some of the bears out there. Now, this also has another bend to it. So not necessarily technical analysis, but one of the things that I have mentioned in the past is the only way that you're going to see Bitcoin really, really dive to some of the like massive downside targets. I mean, even 47 to 45.5 would be really nasty. But let's say I've seen some 38.5 targets. I've even seen $35,000 come up. And I want to give you a little bit of perspective. Yes, they're technical levels, they're monthlies, and this is the monthly chart. So I wanted to point out that a spike down to the upper first on the monthly is not out of the ordinary by any stretch of the imagination, and that's coming in the $50,000 to $53,000 area. So from a volatility standpoint, it's not a big deal. If it got below there, it starts to become a much bigger deal. Now, does it do anything in terms of trending structure on the monthly? No, absolutely not. In fact, this is something that is very important. No, we'll look at Dixie in a little bit here. We got to go to crypto. We'll look at the index. But, in terms of monthly structure, as I throw on a swing chart here, we're looking at this, in higher low structure anywhere above the $25,000 lows over here. So, I'm not bearish on structure by any stretch of the imagination, but if Bitcoin dives any further and is held down, we're looking at a long spring into summer in terms of consolidation, which would actually increase my targets to the upside. And that is, I know for many, because when they see things break down and Bitcoin goes into a long kind of consolidation period, many get very, very, very bearish. It's all over, triple top, it's done. We're never going to see new highs again. That's typically the sentiment. Just like on the way up, it's going up forever and it's never going to come down. In terms of structure, it would be very, very healthy. But because of the cost production for miners, which you are likely to see is a lot of miners starting, a lot of smaller miners going out of business. What would then happen? From there, you would likely see consolidation of these bigger companies taking over those smaller mining companies, buyouts, and liquidations, of course. And then the biggest mining companies, of course, being the beneficiaries of new hardware and infrastructure and possibly even new locations. Now, this is something that many people who are more on the conspiratorial side of things with some of the investment companies that are using assets under management, like your BlackRocks of the world. They're the big ones, so we might as well just say their name, right? Because they're also invested in many of these miners as well. That, hey, they could influence picking up some smaller players in the market by making Bitcoin trade, well below production cost. They obviously have the assets under management. They don't own the Bitcoin, by the way. It is the portfolios that they manage that own the Bitcoin. But in this case, we're seeing, we would probably see that scenario play out where you get the bigger players get much bigger, and smaller players probably gone, and or move on to other items to mine. Not much else you can mine with an ASIC miner. There are a few things, but usually they're not worth it from a cost benefit analysis basis. So, I did want to call that out. Bitcoin can dive really, really deep and still be perfectly fine for macro structure. And as it stands right now, I'm seeing like a lot of doom and gloom right now, especially today. It's a Friday, and it's a bearish close, and we had the Michigan consumer sentiment report came in stupidly low. It was forecast to be about a 76, and it came in at a 67.4. All the markets are dead. Everything's done. It's over. But there's nothing new. There's like no big news outside of like, solar storm. We're all going to die on like, what is it, Monday? Yeah, Monday. So outside of people, I mean, one of the things that you have to think about in this context, especially because I did see a technical analyst, well, they call themselves a technical analyst, mention that the reason why is because the consumer sentiment report and that this big solar storm is coming. So everyone is scared. It's like, okay, if you really think we're all going to die, what the hell do you need to exit exit all your positions for? What are you going to need that fiat currency for then? Like, it doesn't make any sense. But anyway, that's anecdotal stuff. But yeah, this is it's bearish for Bitcoin. And I do want to throw on a bit more of a bearish bent on this as well. We're looking at a potential cross down on any close today below 62,800 basically. And that is a daily cross down. That is a rejection of the bullish control zone here at about the 60 to 62 read up here. So that would be a rejection. And then, of course, we're looking at price hanging around the lows, maybe even testing the lows and lower. So understand that it's still bearish in the momentum perspective. Obviously, trend is down. All your oscillators are going to be down, that kind of stuff. So you got the 12-hour with plenty of room to head down below 63,600 now. 8-hour is going to continue to head down, I believe, or cross back down in this case at 60,600. 6-hour is pointed down, not necessarily looking for a cross down unless we see a close below 60,700. We are looking at the 4-hour heading back down. Now, this is a rejection in the bullish control zone, so 60 to 400 will complete that cross down in the next 4-hour closure. We've got the 3-hour headed down. This is a full-on bearish reset, finding that resistance, lower highs. Now, it was a bit of a downtrend break, but because it threw bearish divergence on the other side, I believe it actually did avoid it, to be honest. There's longer-term bearish divergence, I believe. No, actually, no. It is tagging around the RSI bearish control zone, but obviously it's got plenty of room to keep heading down, and it's not looking as though it wants to throw any bullish divergence, at least right now. And rejection of the upper second, run the lower second. We've got the 2-hour well and down 63K to turn that back up. And the hourly is maybe a saving grace, but to be quite honest, this is expansion still to the downside. So we had a compression. We had the consolidation, finding resistance up here, runs the high on compression, gets that expansion in a very aggressive way to the downside here. So this is continuing expansion. This is 91 over 67. So I don't think this is going to let up anytime soon here. At least at minimum, it's going to last throughout the rest of today. If it can find its low somewhere around here and start going sideways and cooling that down, then maybe it has a chance. If we look at BBWP, though, look at how much room it's got to the downside here. over the course of maybe 2 to 3 hours, moving average can catch up if Bitcoin goes sideways around this area and can maintain like around $60,000. And then, then it maybe has a chance to go up and bearishly retest at minimum. I would be aware of any rejections of this prior low at around 60,800, right where it just rejected between that area, kind of trading around there and now losing it to head down and retest this low. If it does happen to pop up, that monthly at 61,350, this high over here just above it at 61,800, good candidate. That's right around the current lower first. This is likely going to continue down though in the next hourly closure. Above there, I'd be aware of any resistance around 62.5. That was the consolidation. Price was being held up there. Above there, of course, it's got to get above its local highs here at around 63,500 to go test some of those deeper targets that we were talking about to the upside. 64K is going to be a big one between 64 and 65. So if you do see a reclaim of 65,000, I think things looking much, much better for Bitcoin. Of course, take out that high at 65.5 is mandatory, but as it stands right now, this is a move in progress, and across all time frames, it is telling you, yeah, this is going to continue at minimum for the duration of today, and likely to start bleeding over into the daily, 2-day, 3-day. Now let's go ahead and look at the 2-day, because the 2-day did just open as a rejection of the daily basis band here. Lower second standard deviation is something that I do like to see tagged after closing below it. So we had 2 closures below the lower second. This is quite honestly a pretty structured drawdown until, of course, we see another close below it, and then that low dropped. Of course, then I'd be looking for that expansion to 53 to 50. But in this case, tagging around the lower second, which is right there at the monthly quarterly at 58.8, is fine. It's not desirable, but it is fine. Any closes above 58, 440 actually are, still going to provide for pressure up from momentum on the 2-day. But the way this is looking right now, you see any closes below 58.8, that's not only is that pivot likely to be ran, but start closing below it again, it's pressure down. It's going to tell us basically it wants to go hit some of those deeper targets down to the downside. 62,600 is the 3-day pivot. This is going to be closing with the 2-day. That is going to be closing over the weekend. So we've got Friday closure. It's going to close with Saturday coming into Sunday's candles. So 2-day, 3-day closure coming in on Sunday. So pay attention Sunday, see where things are. Lower second standard deviation, again, is right there at that 58.8. So you do want to see price close above there and maintain that area as an area of support, as it is an area of support. If it is lost, then it is looking downside angled. Now, the 4-day, which is also going to close on Saturday's candle coming into Sunday's candle, you can see the lower first standard deviation. This is a compression. We can get a wick down to the lower second standard deviation. That would be the equivalent of running the current low. But if it breaks down, we step it down to the lower third. That's right in between that $53,000 to $50,000 down here. If it starts closing anywhere below there, we're looking at 4-day expansion. Just so you understand, if we start seeing 4-day expansion, then we are looking for much further downside targets, to be quite honest, and a much longer reaccumulation period. The 5-day lower first is right around that current wick low where the 4-day lower second is. So again, if you see any closes below that lower first at around that 55.5 to 56.5 where the current wick low is, we're looking $53,000 to $50,000. Lower seconds coming in at around $49,000, but likely, it could get tagged. That's not too far away from $50,000. Of course, anywhere below there, we're looking to that monthly area at 47 to 45.5. Bitcoin needs to recover on longer term timeframes, like the 5-day needs to recover above $69,000. That is currently right where the upper first standard deviation is on a 5-day. We can see that the weekly basis band is also right by the current wick low. That is coming in at that 56,500 area. So weekly basis band, need to see hold up on the weekly. If it does not, we're looking down to where? $53,000 to $50,000. And hey, guess where the lower first standard deviation is on the weekly? That's coming in at 45.5. So it's coming in that March of 2022 monthly close between those March of 22 and August of 22 areas between 45.5 and $47,000. So please understand that these targets are available if Bitcoin breaks down from its current range. So it is not my first take on the most likely thing to happen, but it's definitely painting the picture if it starts to break down below this current wick low at 56,500. So you kind of want to see Bitcoin hanging out above 59K, I'd say, roughly speaking. So that is the bulk of today's analysis. We went through a lot. What I do want to do now is take a look at chat and see where everybody's at in terms of their headspace and what they're seeing, and answer some questions. And today's going to be a little bit shorter, as I mentioned at the beginning of the stream. I'm streaming a little bit earlier today because my water heater broke, and I have a technician on the way. So let's go ahead and get the swing chart. I'll take that off. We don't need that. We can see it's very clearly a downtrend. If you really want to understand where things are, just turn on a line chart. It's pretty obvious. Higher low did not really get set. It needed to break above about 64 on the higher low for a swing chart. Me on candle closes 63,200 or so. Did not do that. Rejected the basis, heading down below the lower first, likely to test the lower second. You can see that on a swing chart, we're looking at that 58,200. Anywhere below there, pretty bearish unless it swung and holds up around that wick at 56,500. Then you see bullish divergence. Anywhere below 55.5, you're not going to see bullish divergence populate anymore. So understand that. We're starting to look lower then. Let's go ahead and jump into the various chats here. Oops. Yeah, we can glance at traditional markets real quick, but not right this second. I do want to see if anybody's got any questions first. Let's go through chats here. Hi, Baba. Hi, Ivan, Bobby, Roka, Cheryl. Good to see you all. Sam is here as well. Hi, Sam. What else do we got going on? Who else we got here? Got Trading Owl. This is Henky, I believe. Hi, Henky. Yes. No. Bobby, the August of 2022 is the monthlies. August of 2022 monthly close at 47,000. March of 2022 monthly close at 45.5. The August weeklies are from 2021. That's at 51.8. December of 2021 is at 50,800. So this was monthly closes from August of 22. No, you're right. I apologize. You're correct. It's 21 and then March of 22. My apologies. You're correct. So we'll fix that. I appreciate that. But August of 21, March of 22. Yeah. Because that was the rejected area, was 21. So yes, you're 100% correct. Thank you for correcting me. Let's go ahead and take a look here. Hello, Roca. Let's see. Yep. Not too many questions here. What type of exchange do we use to trade ordinals? Magic Eden mostly. If you're unfamiliar with ordinals, you probably want to use Xverse to start. Unisat, you have to manage your own rare sats. So um, I use both Xverse and Unisat. Yep, Roca mentioned this as well. Can I look at render? We'll see if I have time. So yeah, yes, Bobby, I know. I'm aware. I saw it. As I said, thank you for pointing that out. All right, so let's go ahead and glance at Dixie real quick. Let's get that out of the way. So Dixie is, like I said, in a monthly consolidation. Beware above 107.40. That's going to look ugly for traditional markets and Bitcoin and everything else. It's in the process of possibly trying to turn itself around here. It's looking a little better on momentum than it is on the actual chart. 104.91, and that would continue to push momentum up, but it is in a bearish posture at the moment. So realistically, Dixie's in a range. And as long as it's above 105.50, it's fine and more likely to set a low and turn itself around. Anywhere below, I'm sorry, that's actually 104.50. Is that what I said? 104.50. If it begins to lose that, then we start looking down to this next low, and that's coming in around 104 even, at least in the shorter term. Anywhere above 105.75, this is looking to test up again to 106, and then the highs here at 106.5. Above there, we're looking above 106.5. We're looking to like 107, and then the 107.40. If you start seeing 107.40 closed above, Dixie's going to take off. So let's look at traditional markets. Ugly sell-off and a big old doji in the ugly sell-off in the lower term time frame. So like the 15-minute, nice little bounce though. This is all based on the sentiment report that came out. Now, this is a higher high on the daily, obviously a much higher high. Do not be surprised, though, if this starts to turn around and head back down. So any closes today below 39,230 and then coming into next week, probably right around where it's trading right now. If it does not get continuation to the upside, it's likely to pull back anywhere below that upper second standard deviation on Dow. And that's coming in at that 39,420. Nice. You got memes in traditional markets too, by the way. Then, that opens up the area here between this high, this failed swing at around 39,000 to that upper first at 38,900 or so. Anywhere below there, and I do think this goes for a gap fill, anywhere between the close here coming in from May 3rd at 38,6 to 7, and then down to the actual wick here at 38,576. Below there, it's going for a gap filled down by the basis, somewhere around 38, 300 to 400. As long as it's holding up above 38,000, it's looking fine. It did a nice little double bottom in here to push itself up, but this was all just a gap fill. And remember, I talked about this. That gap fill up to around 39.6. It needs to get above there, of course. Then we're looking at the all-time high and higher. It's not stupidly ugly right now, but it's not great. Getting a rejection right where it's getting it at this particular moment. So it coming back down is, more in the cards than not. Same for NASDAQ here. 1800 is going to be the number to beat to keep momentum to the upside. It is well above the upper first, so if it does put in a high here, keep an eye on that upper first. It's right around this higher low. I'm sorry, it's a higher low, higher high swing, and that's coming in at around 18,000. Anywhere below there, we're looking for a little bit of a gap fill down to like 17,900. Below there, we're looking for a real gap fill all the way down to the basis here at 17,600 to 700. And then it's got room all the way down to the lower first at 17,340, 350 area. If it starts to break down below there, structure is probably compromised. We're looking for the lows again in the upper, in the low 17,000s, around 17,000 even by the lower second down there. If you see anything like that, Bitcoin's probably heading down in a very, very rough fashion. When looking at SPY, hanging out at 520, did tag that upper second standard deviation. Any kind of high put in, just keep an eye on that upper first. This is by the little swing high to swing low here that's going on about 515. Anywhere below 515, looking for a little bit of a gap fill down to that 510 region, somewhere around this doji here that's in the middle of no man's land. And then below there, we're looking, 505 to 510 by the basis, and this candle here from the 2nd of May. And then it needs to hold up above the lower first, which is this last big higher low down here at 500 points. Anywhere below there, it's running the lows, possibly lower, about 490 to 495. So this doesn't look great, as you know. And then, of course, momentum's going to turn down on any close below 517, which means that when it opens on Monday, if it closes right here like this right now, even if it doesn't break down from that momentum pivot, you're looking at this momentum being right on top of price. Yes, it's in and around the all-time high, but if it starts to paint a lower high, we've already got daily lower lows on the board, right? So lower high, this would be your potential setup for a distribution. And that's something that you might not want to hear, but it's across the board. Potential distribution is in the cards. You look at it as consolidation first. Anywhere below this last lower lows on these charts, and you're looking at distribution confirmed, and it's no longer a consolidation. So understand that that is what we are looking at on these charts. So much like Bitcoin on the daily back in 2021, for many of you that were with me during that time period, during the initial distribution into reaccumulation, that is what traditional markets are painting right now. And with the opportunity that Dixie could potentially take to the upside above 107.40, if you start seeing those confluences all line up, we're in for a very long spring and summer of reaccumulation that could, last a little bit longer, but likely to pop up around the elections here in the United States. Commodities, gold is doing quite well, to be quite honest. This is a little bit of an inverted head and shoulders, which is a throwback to the highs here. It's nearly hit that target anyway. It's got a few percent more to go, up there at about 23.92. If it can close above the upper first by end of today, which is at 23.66, that would make that full inverted head and shoulders a possibility. We did see it bottom out in our area right there by that order block candle on the daily. And gold actually is painting a much more rosy picture right now, and anywhere above 2,300, and it's looking okay coming into Monday for now. We can always just check on it again on Monday if we're all still alive after the big solar event, right? And that's kind of my take on those markets. I can look at maybe one or two things. Cheryl did mentioned render. I can look at render. I'm going to tell you right now, most cryptos are probably getting killed. Um, this is quite a bit stronger than many, but it's still just in a really big range. Nice move back down. Nice little double bottom. It is in swing higher low structure. You need to see a higher low on the daily put in. Preferably, you want to see it come in somewhere around this previous high, between 922 and the basis, which is coming in at 865. Anywhere below there, you need to see it holding up above like deeper $7 area around 760 to 770. If it does start to run that area, it's in danger of running the lows and lower. It's its pivot is at 1085. It is currently trading below there. So that's my take on render. Runecoin USDT. You want the Gate.io has probably got the longer chart. This is down forever. As it looks right now, it's losing its wick low at around 0.0082 cents. So what's it trading at right now? It's at 0.007369. Nice. Yeah, so I mean this does not show any signs of strength right now. This is all down. If we start seeing some sort of a consolidation, on lower term time frames, great. If not, it's going to keep expanding down until it finds some sort of a base. I mean, back above 0.009, looking fine. Even a reclaim of 0.008 would be preferable right now, but it's pretty ugly at the moment. And the further Bitcoin drops, the further this is going to drop. So this is a Rune coin. This is your RISIC, which is a play on the ASIC. So yeah, that's just getting killed right now. And Bitcoin trying to find some volume around these lows, I imagine. Let's see. Yeah, it's starting to see a little bit of volume down here as it's swinging the low, but it's below this volume-based candle that pushed down below the lower second, and trading below there, it's ugly. It's going to be more likely down. Back above, you can even see the close open after it lost this volume-based candle here. That's at 60,700. If it continues to trade below there and especially lose the wick low here, then it's looking pretty ugly to continue down to test further downside supports. And quite honestly, the faster it races, the more momentum it's got bearishly from the other side. It's going to be pretty ugly, and probably looking to run that lower low, unless it stops around that $58,800 to $59,000. Because the initial shot of volume down was broken down below. So if this wick low breaks down where you saw it close back inside of that volume-based candle here, then you're looking at the potential for it to try up a little bit further, maybe even the basis around 61,350 again. But other than that, it's painting more continuation. Even the lower second is down here at 59,650. So you can even take this full candle, but if you go down to the minute chart, we can actually refine where the volume actually came in. Yeah, so the volume actually came in a little bit higher here. So this candle was right here at 60,850. Top side of this volume-based candle on the minute chart is at 61,300. So right around that March, that October monthly close. So just shy of it, a little bit of front run, and then it's trying to find some volume down here, but it's not doing well at the moment. I mean, even down to the minute chart, we getting divergences. Let's see. Yeah, we're getting some. 3 minute. Potentially. Swung the low, so it might try up. 5 minute. Let's see. Yep, 5 minutes got a little bit of opportunity here, but that doesn't mean that it's not going to go lower. 15 minute needs to at least throw some bullish divergence locally. Is it at extremes in some of the really low term time frames? Sure, but it's all about the longer term time frames at this particular moment. Um, it lost its chance for bullish divergence as it stands right now, unless it can pick itself back up above like 60,500 at minimum. Then maybe it can throw some bullish divergence on the hourly. 4 hour is more likely going to be a candidate for bullish divergence. Let's go ahead and look. Nope. Not unless this gets bought up a little bit in the next little bit here. Needs to get above at least on a close and start setting like a higher low, or I'm sorry, start setting a low above like 38 on RSI here. So yeah, weak looking, cross down. It's looking for more. Maybe some lower term time frame bounces here and there, but likely to result in rejections unless it can regain, $62.5, $63,000, which is a lot to ask right now for Bitcoin. Baba says, can you look at PYTH? Sure. I guess we'll go Binance. Ugly. Oh. I know this is probably seen as opportunity right now, but that's a picture perfect rejection of the upper first in the middle of a downtrend. And the last real lower high to get above is all the way up here at like 57 cents. So, I mean, if it can take out 51 cents or so here at that upper first area, looking better, but it's got to hold 46.37. Otherwise, it's heading down further. Yeah, no, I mean that's even lower than this wick low over here. So this is ugly. We're looking probably down a bit further here to the lower second around this high, around the low 40-cent region, 43-cent region. Starts getting any lower than that, then you're starting to target like 38 to 40 cents. But yeah, on the daily, I mean, it's got to take out basically 58 cents to even start looking a little bit better and not sick. This is ugly. Yeah, above 50 cents, it could turn momentum to the upside, but there's no bullish divergence on the other side of that unless it can set. Yeah, there's not really much. This would be very weak drives of bullish divergence, even at that. Maybe it could start turning itself around. Where are you going to see that begin? Above about 50 cents, 51 cents. But that's going to do it for me today. I do have to get going. I got to go and prepare for this guy to come over and fix our damn water heater. I'm glad I have two at the moment on this property, but this is one of the main ones, so I need it fixed. And yeah, that's going to do it for me today. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please be safe. And of course, trade safe as always. And again, a shout out to the various communities that show up, hang out, and show me love. That is, of course, MBO crew. That's the new Bitcoin order. We've got our Nat Monkey crew always coming through. We've got a few other new ones. We've got Peppy Ordinals Maxi has been coming through hardcore. Thank you very much. And then, of course, Sigmas always show up in force. I appreciate you guys. So we're probably going to have a few more that come and hang out as well. And, of course, if you do enjoy this content, go ahead and like, share, subscribe, follow, all that good social media stuff if you do enjoy this content. And, of course, it will always remain free. And one final bit before I go here. The indicator that you see me use is called the Landy Bands. It is a triple Bollinger Band setup. It has other features built into the indicator, like a volatility metric called BBWP to measure volatility. It also has moving averages, super trend, and some signal stuff that you can play around with. It is free. It will always remain free. You can find it in the link in the video description. It is also linked in my profile on X. So you can go ahead and just add that to your chart. You do need to directly add it to your chart. It is not publicly searchable in the indicators tab in TradingView. You do need to go and add it from the link that I specify. It will be publicly searchable soon, but doing some tweaking and adding some more features to it. So once that is done, then it will be made available. So with all of that said, Landy out. Take care.